Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 18th of January 2012, and the week so far has been highlighted by quite a bit of bullishness for markets. Last Friday there was quite a substantial move to the downside. There was real concerns as rumours were filtering out to, amongst market participants that France was about to be downgraded by S&P. That rumour turned out to be true, and the weakness set in at the end of last week. The subsequent downgrade of the big European bailout fund has also dented confidence somewhat, but really the bulls still seem to be in control. The market has recovered quite well, so the FTSE's around 5,700, the Dow also looking better, 12,500, and it's helped keep the losses for the euro subdued somewhat. Euro-dollar's at 128.00. Cable has suffered a little bit more than the euro in the last few days. Cable's at 153.50. Gold has also benefited a little bit from the increase in risk appetite. It's at 16.54, and Brent continues to do relatively well. The increase in risk appetite and also tensions mounting in the Middle East, it's at 111.90. So that downgrade from the S&P of France from AAA rating to AAA plus is very much the highlight at the end of last week. We had a quiet start to this week with Martin Luther King Day in the US, but really the rally has been supported by strong European indices. It's the German DAX that has really led the way, and that was helped supported by not only very strong Chinese GDP numbers. I say very, well, they actually softened, but they were higher than the market had expected, so the giving a little bit of impetus to the argument that China will only face a soft landing. The markets take that very well, and also in Germany we saw a very good business confidence survey, so the DAX has been moving quite well to the upside, and that's helped support the FTSE. We've also seen copper prices as well, and that's assisting mining stocks. So all in all, there tends to be a bit of a bullish feel about markets at the moment. Today is obviously lots happening. The Troika goes to Athens to discuss how to deal with the Greek debt issue, and how bondholders will have to take a write down, or whether there's going to be more money for them to bail out Greece again. The news today is that the IMF is due to expand its lending resources. It's going to appeal to the likes of China, Brazil, Russia, the sort of BRIC countries, the emerging markets, the strong economies, to up their contributions to the IMF. So the markets are a little bit stronger on the back of that at this moment in time. So how are clients trading at the moment? Well, the strength has brought out the bears in clients. They obviously feel that the Eurozone is going to win over, the troubles there will win over, and the markets will decline. They feel perhaps that the strength so far this year, early stages of this year, is going to fizzle out at some point. So they're short the FTSE, short the Dow and short the DAX, pretty much short almost every index. On the currency side of things, they're long the dollar, so again that sort of risk aversion for clients seems to be reflected in the currency markets as well, and they're long sterling, interestingly, so sort of bucking the trend there. For the rest of the week, a little bit of economic data to focus on. Very much tomorrow is the US data with housing starts, the weekly initial jobless claims, CPI data, and Philly Fed number, so watching closely that tomorrow. And then we end off the week with UK retail sales on Friday, so that will be closely watched. The theme of this week has to be whether the FTSE will catch up with European counterparts. I've got a chart here. It has met resistance around the 5,700 to 5,720 area and just simply can't seem to get beyond there. But the strength so far would suggest that because the index is above its 200-day moving average, there is a bit of support. So we may see a break to the upside, and if we do, that will mean a test of last October's highs around 57.70. So we'll keep a very close eye on this chart. We'll keep a close eye on the moving averages, where there seems to be a bit of support for the FTSE, and we'll see whether it can break through the key resistance over the near term. That's it for this week. As ever, do give us feedback, media@capitalspreads.com.